podcast series by the Association for Accounting Marketing. I am Katie Tolin of CPA Growth Guides, and joining me today is Gale Crosley. Gale is president of Crosley+Company, where she helps firms drive revenue through the discipline of practice growth. She's also the author of At the Crossroads. And in this book, she takes a fictional look at a CPA firm that is struggling and how it achieves tremendous success by following her practice growth discipline. So, Gale, thank you for joining us today.
Thank you, Katie. It's great to be here with you.
So today we're going to be talking about managing your pipeline process. There are many firms that have nothing. There are some firms that have a pipeline document but don't do anything with it. But those firms that are truly driving opportunity pursuit in their firm have both a pipeline and a process around that opportunity pursuit. So I want to talk about the document itself, but also that bigger picture of everything that it entails. So Gale, why don't you start us off? What's the difference between just a pipeline and an opportunity pursuit process?
A pipeline is a document. So it's an Excel or some other document, which is an inventory of all the pursuits across the firm. And you may also have personal pipelines that are just for individuals or for segments like industries or service lines. But the pipeline that I recommend is the Firmwide Pipeline, which has all the open and active opportunities on a pipeline document for high visibility within the firm. But the document itself is not enough to really drive the behaviors that you need in order to increase the win rates of the opportunity process. What you need is a process around it which enables you to look at the pipeline on a frequent basis with all the leaders of the firm and drive a review of the pipeline with next steps and follow-up items and so forth that really gets you where you need to be. So in the first place, with the pipeline itself, it's a document that can be published and stuck in a drawer and nobody does anything with and doesn't do much for you, or a process which really drives behavioral change and optimizes win rates.
So let's talk about that document itself. You know, I know there are firms that use CRM or possibly some other sort of software to track it. In Excel, it works too. It's a great way to track your pipelines. Despite what people use, what are the key pieces of information that need to be part of that document so you can use them in the process?
There are a few things that are critical. The definitions of what belongs on it and doesn't belong on it is pretty important. So you've got to have these stages that are from unqualified through final stage and formatted in a way that is easy to read and that doesn't have too much information on it but has enough. So it's like a balance sheet or an income statement that has certain formats and layouts. You can pick one up anywhere, anytime. And if you're an accountant, you can see what exactly you're looking at. And you have current assets and non-current assets, and they mean things to people. And the same thing is true on a pipeline. The definitions are important. The other thing that's important is to get the stuff off the pipeline that has either been won or lost so that it only has open and active opportunities.
So you mentioned a WinLoss Report. What is this and why is it an important document as well?
Once something comes through the pipeline and is either won or lost, what happens is it gets pulled off the pipeline and is put on a win-loss report. And it's an inventory as opposed to the pipeline, which is an inventory of the open and actives. This is an inventory of all the wins and losses, year to date or 12-month rolling. And you'll have from high to low the wins and from high to low the losses. And that would be high to low on dollar amounts. And then a calculated win rate, which is the percent of wins over total opportunities and the percent of win dollars over total opportunity dollars.
So I know you encourage people to have, whether it's a meeting or a phone call, and actually review this pipeline document. Why is that important in the whole opportunity pursuit process?
Because it's so easy to get distracted with all the daily things that we have to do, to think of business development and growth as something as a extracurricular activity, as an afterthought. And the high growth firms and firms that are really sophisticated with growth and have really good sustainable growth are the ones that realize that they need some mechanism to pull growth front and center on a continuing basis. And the pipeline process is the thing that does that. It enables you to have everybody in the leadership position get on the phone for a half hour every other week and review the open and active opportunities and go right through it. When I facilitate pipeline reviews, it's okay, here's the first opportunity. What's your next step? What's your next step due date? Here's your second opportunity. Who's the leader? The leader's name is there. What's the next step and next step due date? So it drives the process of keeping the momentum in the selling cycle, which is so very critical to maintaining a high odds to win.
You know, I thought it was interesting you talked about, what's next and what's the due date. I think a lot of people think about a meeting on a pipeline to kind of tell you what I've been doing. How does a firm, if they're already having maybe pipeline calls that are more reporting, how do they make that shift to what's next? And why is that a good move for them to make?
Yeah, because what you did is yesterday's news. Great, you did it. The question is, what are you going to do next? And the hardest part in selling is to try to figure out the next step and the next step due date. Because next steps are what keeps the thing moving and alive. And if you are really good at selling next steps, then you will win the prize more often than not. If you're unclear as to what the next step is, if you don't have a committed time frame and next step action item with the prospect, then that sends a red flag up, and those red flags are evident when you have your pipeline review. And when you have the pipeline review and see these, if you're the facilitator, like the managing partner, you can have interventions. You can see that someone's in over their head and doesn't know exactly how to handle this, or the opportunity was something that they had never seen before, and you can, with that intervention, deploy resources and shift your maneuvers in order to increase the odds to win.
You just mentioned the facilitator and that being the managing partner. Is that who you recommend facilitate these meetings, or can someone else take that role?
The managing partner. Okay. Because the people that are in the room are the partners, and they're beholden to him. They're not beholden necessarily to anybody else in the firm, and sometimes not even to themselves. But they do have a certain responsibility that they think in their mind of making sure they don't let the managing partner down, and that he is driving the firm, and his job is to drive the growth of the firm. So it's not something that can be easily delegated when you are responsible as the head of a company or a CPA firm to drive the growth of the firm. That's your job.
So, you were talking a little bit about selling next steps and why that's so instrumental. And it really got me thinking about sales training. In the entire opportunity pursuit process, where does that come into play? Is it important, and why?
Well, sales training is interesting because the basic sales training that most of our, or many of our accounts get is very basic. It's, how to shake a hand and hold a conversation. But training that is at the very optimal level, like landing the big fish, it's a workshop that I do, really focuses less on techniques and more on the application of the techniques to the situation at hand. So, like, for example, qualifying a lead and knowing how to qualify a lead is critical, because if you don't qualify the lead properly, then you waste a lot of time in spinning wheels and so forth. The pipeline process shows the unqualified leads that are in the pipeline, and the minute that they hit the pipeline, that is when they're unqualified, and this is the time where most of the mistakes are made that lead to losses. So the pipeline enables you to have visibility to the opportunities, and then opportunity training enables you to learn how to apply methods and so forth to actually win the opportunity.
So do firms that have some sort of sales training with methodology, do they have more success?
It depends. They may have more success with the smaller opportunities, and the firm-wide pipeline is designed to capture the large opportunities, the ones that are larger than normal, therefore they are more significant to the firm. And those opportunities have a different necessity, because the basic training won't necessarily give them the tools that are required for these complex opportunities, being larger, more than one decision maker, and one or more competitors. And when you get into that realm, you have to up your game and really learn a lot of techniques that are not taught necessarily in basic sales training. You need to get to very advanced sales training in order to really make that happen.
Is that something that you think as a marketer that we can do in-house, or should we be looking outside of the firm? How do we bring that to our managing partner and to our partner group to convince them it's important?
Yes, look outside the firm and look for training programs that are at a very high level of training, those with solution selling programs. I don't see very many in our profession. They're mostly over in the corporate side, corporate America side, because this is where they've been selling large opportunities for a long time. And probably of anything that I brought over from corporate America, that's been the most valuable, because there was a market hole that I saw here. And you really need to, for the large opportunities, take advantage of trainers that train at that very high level with these long selling cycles, large opportunities that are really solution selling.
So one question we hear in AIM a lot, whether it's on our discussion list or just in meetings with people, is, wow, we've been doing a pipeline meeting for a long time now, maybe 5 years, and it's really getting stale. So for those people, what tips do you have to keep these meetings fresh so that people are engaged?
Got it. It probably has to do with some of the mechanics of either the length of the meeting, the time frames over which the meetings occur, the people that are in the meeting, or the facilitators. So best practices are, number one, have the managing partner facilitate it. If that managing partner is not a very good facilitator, then I'll give you a few tips that they can pass on to their managing partners. Secondly, to keep the pipeline reviews at a half hour. Even for the very, very large firms that I work with, it's a half hour. And that way you can click through the opportunities very, very quickly and not get people off track talking about this, that, and the other thing. A half hour every other week. Every other week gives you enough of a frequency where you can have momentum, but not so often that people are overloaded with having to show up on a phone call. Use a conference call bridge so it's easy for people to get on the bridge and they don't have to come into the office. And then what you want to do with the pipeline call is to mix it up. So sometimes when I facilitate, I'll start at the top of the pipeline. Sometimes I'll start at the bottom. Sometimes I'll start with the new ones that are on it. Sometimes I'll start with the ones that have had activity. Sometimes I'll do it by industry. Sometimes I'll do it by service line. And so I mix it up a lot and listening for certain things like, does this person or this team really know what they're doing? If it's just merely a reporting in and not a listening for where someone needs help, it can become very stale. And sometimes I find that it's stale because the training has not been executed along with the pipeline implementation. So if you have pipeline implementation, but you have no training and people are making the same old mistakes over and over, then I can see whereas sometimes it would get stale because of that. So the pipeline is designed to give visibility and illumination so you can have interventions and also very short snippets of information like ABC company, the CFO and I talked last week. I qualified the lead. The next step now is going to be in 2 weeks from now, we're going to get together again and drill deeper into some of his basic issues, that kind of thing. And that's it. Okay, now let's go on to the next lead. So sometimes they get really stale because people are off track and off course, and the facilitator needs to keep them right on to next step and next step due date. That's where it needs to be.
So you talked about looking for ways to help and providing guidance. Should everyone on the call be sharing that, or is that more of the managing partner facilitator providing advice? What's the interaction?
Very much. It's about the group itself, because what I usually do is I start with the win-loss report and I say, let's first celebrate any wins that we had since the last time. And they're color-coded in a light green, so we can very easily see the lines that were either won since the last time or lost since the last time. So let's start celebrating our wins. Joe, please tell us about your win. What was the key to the win? Why did we win? And he may say something like, well, we already had an in because I've been courting the guy for the last 2 years. Okay, that's interesting. But more interesting ones are, tell me a little bit about why we won or lost. And they'll say something like, we were able to put together a strategy, which was a win strategy, and here's what it was. Those are the ones I look for and listen for. And sometimes you have to probe around to find that, because people tend to be overly modest and don't, say, okay, I won because I had a really good strategy. And so the wins and losses are the ones that we start with first and really get them talking. And I'll also often say, does anybody else have a question or a comment about that win? And someone on the team will say, well, Joe's being too modest. What really happened is that kind of thing.
So you talked about the meetings being every 2 weeks and 30 minutes and led by the managing partner. What happens when the managing partner takes a 2-week vacation? Do you cancel that call? How do you keep the momentum going in the absence of the managing partner?
Usually have someone sitting in to facilitate. And in fact, I have that coming up where my managing partner is going on sabbatical for 6 weeks. So I'm going to facilitate the next 3 calls for him.
Yeah, you don't give up. You don't get a vacation from this.
I get vacation from the pipeline call. And it's very important for people to actually show up on the call. We have a situation right now where we just got it up and running. And our first pipeline call, we had several key people who didn't show up. So they haven't gotten the memo yet on how important this is. And the managing partner is going to have some conversations with them. And I said, if you only have a piece of your team showing up on the calls and you don't say it's for everybody and are able to make that happen, then I just say pull the plug. I mean, there's no point in having half of the firm sitting there, half of the partners sitting there, and the other half not in the room, and think that it's going to be a really powerful process, because it loses its momentum at that point.
So I know you love metrics. So as you're going through this opportunity pursuit process, the proposal, the win-loss, you talked about measuring a couple things. What KPI should we be looking for when it comes to growing our firm from this process?
There are a couple of key KPIs. The first one is the win rate. Dollars won and opportunities won. And my very best firms have a win rate that's somewhere between 60 and 70%. And except for the ones that have really heavy nonprofit and government practices, that tends to come down. But 60 to 70% would be the very best. And then the other KPI is the percent of total annual revenues that are in the pipeline at any point in time. So if we have a $10 million firm and we have $1 million of open and active opportunities in the pipeline at any point in time, that's 10% of annual firm revenues. And that's a good, solid, performance. My best firm has been averaging about 28 to 38% consistently for years. And they're one of the highest growth firms in the country. I have other firms that the win rate is down, the pipeline dollars are down between 3 and 6%, and they're not growing. So it's a wonderful metric to show whether you're a high growth or a no growth firm or something in the middle.
Okay, so I have one final question for you, because I know you've helped many firms implement this opportunity process, pipelines. Is there one thing that you think is instrumental to success, or on the reverse side, is there one obstacle that they're going to have to overcome to be successful? So what's that one thing?
The one thing is the managing partner facilitating the pipeline review.
All right. Thank you so much. I think you provided us a lot of information around how do we take this opportunity process within our firm and make it more than just a pipeline document that sits on a shelf and collects dust somewhere. So thank you so much for your time, Gale.
Thank you, Katie. Good to see you.
This wraps up another episode of Amplify. Watch for another podcast from the Association for Accounting Marketing next month. And always remember to aim high.